We kick you off to the close. Gina Bolvin joining us. She's the president of Bolvin Wealth Management. And Gina, I think Katie put it pretty succinctly here. While everyone's still watching those inflation numbers, I thought the trend line was down. Why are we still scared?
Well, this is just a really big week for the market, and I think the CPI could be a catalyst if it comes out hotter than we're expecting. We are expecting 3.3, down from 3.7, and the market is all about inflation right now and what the Fed's going to do.
When you look at, I guess, what the Fed is going to do, or at least what the market thinks the Fed is going to do, there's really been no indication that they're about to move rates in any direction, really. I mean, I know they sort of keep that one rate hike on the table, but I think most people in the market believe that at a bare minimum, they're not going to go any further than where they've gone right now. Do you buy that?
I do buy it, and I think that segues into this week in retail and what we're going to see from Home Depot, Target, Walmart, TJX, because this is going to give us insight into the consumer. And we are seeing that the consumer is slowing down. We also saw the University of Michigan Consumer Sentiment Survey that's showing that consumers, they're pretty cranky, but yet they're still spending. And let's talk about that all-important holiday sales. What are we going to see this week, and how is this going to affect the bottom line at some of these stores?
And Gina, when you put it all together into a view on the markets, again, you have that dynamic which has been in place for a while, the fact that consumers are miserable by most measures, but they're still spending. And of course, that's propping up this economy along with the labor market. How does that translate into how you should be positioned in risk assets and beyond?
I'm still bullish. And one of the reasons I'm bullish is because of the labor market. We are starting to see it soften, but it still remains relatively tight. Consumers have jobs, and, you still have that YOLO consumer left over from YOLO, you only live once, left over from the pandemic, and they're still spending money. They have jobs. I think that's going to continue. We've just come out of earnings season, and look at all of the headwinds the consumer and businesses have had to deal with for 2023. Coming into the year, we didn't expect as many rate hikes as we had. We had a full-blown banking crisis. There was a lot going on, and still businesses did well. The consumer continued to spend, and I think that resilience will continue.
Well, YOLO is certainly the mantra by which I live my life, apparently some of these consumers and stock investors as well. But you mentioned earnings season, and of course, we're pretty much at the tail end of earnings season. It seems like it's a mixed bag, but from where you're sitting, what grade would you give to this earnings season? And when it comes to your bullishness, did it add to it, or was it just necessarily maybe not bad enough to detract from it?
It was good enough, and I would give it a C. I would give it a C plus. We've seen overall growth increased by about 7%. Although estimates are being lowered, but it was pretty good. I think it had a high bar, especially with technology, to get over, and I think it did good enough. But I do think this is an important week.
When you look, though, I guess at some of the commentary that we've gotten out of companies so far during this earnings season, Gina, a lot of folks, a lot of those executives seem to be concerned about, I guess, just how much gas is left in the consumer tank. And we've heard this time and time again, with a lot of nuance around it, of course. But there is this sense here that sort of the boom times for us spending, that might be behind us.
And that very well could be, but that leads us into, are we going to have a recession? Is the consumer going to slow enough to, have a recession? And is the Fed going to continue to hike rates, or are they going to cut rates? The market's pricing in a 25% chance of a rate cut for March. And I think that, everyone's talking about higher for longer, but I think that it's also an election year, and they may have to cut rates and keep the economy from avoiding a recession. And I do think we are going to get that soft landing.
All right, Gina, great to talk to you. Gina Bolvin there, president of Bolvin Wealth Management, helping us kick you off to the close here on this Monday afternoon.